A couple of years ago, I was visiting a friend of mine. It wasn't even a couple of years ago. And he had a Tesla. And he's like, hey, I know you're a big Tesla guy. You want to drive it? And I was like, yeah, that'd be great. So we got in the car, and he sat back. And I think I might have told this story before. But he sat back, and he crossed his arms, and he pushed a button, and the car just drove itself. He didn't have his feet on the pedals. He didn't have his hands on the steering wheel. He had to touch it every once in a while just to let the steering wheel know that he was there. But the car pretty much drove itself according to the map. And took us away and took us back home. And then halfway into the trip, he goes, hey, do you want to drive it? And I went, yeah. And so he goes, go ahead, floor it. And so I was like, really? He goes, yeah. And so I just stomped on the gas. Not even gas, it's electric. But I stomped on the accelerator pedal. And I was like in a rocket. I was like, that had me, pitted back against the seat. And this car took off 0 to 60 in like 2 seconds. Literally, it's the fastest car I've ever been in. And I've driven Ferraris, Lamborghinis, Corvettes, GT Mustangs, you name it. I've driven some really fast cars. And the Tesla by far was the fastest car. And then I got really excited about it. He goes, why don't you try to take it around some corners and things like that? And I was like, okay. Careful what you wish for. And then I went a little crazy. Like I was going probably 40, 50 miles an hour around these hairpin turns, and I took one a little too close, and I hit the tire. And I was like, okay, I'm done doing that. I felt bad that I, ran into the curb a little bit. Anyway, the point of the story is a couple things. Number one, don't lend me your car. That's number one. And number two, it is an amazing piece of technology, and everything that Elon Musk touches happens to turn into an amazing piece of technology. So if you've been watching my channel for a while, you know that I'm not afraid of Tesla. I love it. It is a great company. The company is different from the stock, but I'm going to talk about both of those here. In fact, don't take my word from it. We're going to hear from a guy named Ron Barron, who is a big Tesla research company. He was on CNBC this morning, and he said some amazing things about Tesla, things that I've been talking about for a couple of years. Not that he copied me, but he's been saying the same things. And he told everybody to buy Tesla at 160. Tesla's double that at 320 today. And it's the kind of research that's starting to catch up with the company. And so we got $1 trillion company that could probably be a $5 trillion company, I think, easily. And he's going to talk about it being even higher than that. So take a look at this clip, and then we'll come back and we'll talk a little bit about Tesla and how you can make money on it. Here we go.
It's right now worth $1 trillion. And what's Bitcoin, $1.7 trillion? So would I rather have 2 Teslas or 1 Bitcoin? So basically, the way I think about it is that Tesla, I think, is going to be worth $3 or $4 trillion, $5 trillion in 10 years, based upon the business plan that I'm aware of. And then Elon believes that longer term, it's going to be worth $30 trillion. It's now being worth $1 trillion.
Okay, so it's not just me, right? It's people like Ron Barron that are jumping on the train. You can also look up Kathy Wood from ARK Invest, and she's a big Tesla fan. She says it's going to go crazy over the next couple of years, and I think it will too. But it doesn't matter what's going to do over the next couple of years. I want to make money now, and I want you to make money now. And by the way, this is just education and information. It's not telling you to go out and buy it. It's telling you to go out and do some research and know what you're doing. That's what I'm really all about here, is that there's a different way to make money in the market if you just learn how to do it. I teach people how to do this all the time. My students are doing extremely well this year, but you should learn how to do it. Whether you learn from me or you learn by yourself or you learn from somebody else, you should have a full system on how to do covered calls. Now today, we're going to be talking about how to do leaps, which are synthetics, okay? These are not really leaps. They're just deep in the money calls that go out about 6 months, and I'll talk about those in just a second. So let's take a look at some of the things about Tesla that I like. First of all, there's a bunch of revenue streams or revenue fingers. All these things are going to be starting to make money if they're not making money already. So the things in black here on the screen are electric cars. They got the best-selling car, the Model Y. They've got the best-selling truck, the Cybertruck, which just came out and it's already profitable. They've got battery technology, which nobody talks about. It blows things away with their technology, and that supports everything, right? You could charge your car with it. You could use the solar panels that they sell to you to charge the batteries, and that can charge your car. If your power goes out, your car could charge your house. Like, they've thought about it, right? Full self-driving and autonomous driving, I told you about that. It is absolutely phenomenal, and I think it's going to be taking over the world. The analogy Elon Musk uses is, 100 years ago you got in an elevator and somebody took you to a floor. It was an elevator operator. Today, it'd be silly to somebody go push the button for you, right? But back then, you needed an elevator operator. Well, in 20 years, Elon Musk is predicting there won't be people driving cars anymore. You just tell the car where you want it to go, and it'll take you there, and it'll be accident-free. But if you saw the event on 10/10, October 10th, they released Optimus robots, these autonomous robots that could pour your drink and give you a high five and talk to you and things like that. I saw one the other day stuccoing a house. He was stuccoing the house, crouching down, putting stucco on the wall faster than the stucco guy next to him was doing it. And so the robots are going to be taking over some of these businesses, some of these jobs in manufacturing, some of these mundane tasks like doing laundry that we don't like to do. Robots will be doing them in the future. I know it sounds crazy, but it's coming. And these robots are going to be going for $20,000, $30,000 depending on what you can get. And it's going to do your lawn and your laundry, and it might pay for itself in a year or something. Anyway, so they also rolled out robo-taxis and robo-cabs. Those things are cars that drive themselves. In fact, the ones that they were rolling out didn't even have steering wheels in them. You just got in them and it took you where you wanted to go. And then Tesla insurance, I've talked about that before, but when you are running an automated company that doesn't have accidents, you can provide pretty reasonable priced insurance, and that's going to be a profit center. So this is just under the Tesla roof, and that's the amazing thing about Tesla. But let's get to how we can make some money on Tesla. First of all, let's look at the chart. You can see that since the election, the chart had a gap up, right? We had a gap up right in here, and then we had the beautiful high volume energy. Look at these beautiful 4 candles in a row. Actually 5 if you count the day before the election, but 4 candles in a row of high energy, high volume price increase from 250 to 350. That's a huge price increase. And if you weren't ready, you might have gotten caught in it. And so you could, it went way up, and now it's pulling back and kind of testing the moving average there. It's the 8-day moving average. And, this stock is going up. Now, if you want to talk about the macro trend with Elon being in the administration, doing the Department of Government Efficiency, I think it's called, Doge, which is funny, then you think that he's not a dummy, like he's not going to pull some strings with the new administration, with Trump, and get some things done for Tesla. Like, that's his biggest holding. That's made him the richest man in the world. I think he's going to get some favors or some favorable treatment for the company. And so that's why the company is going up. So you're seeing a little bit of a retracement from that big increase. So there was a breakout here at like 264. It gapped above that. It went all the way up to 350, 352, something like that. 360 practically, I think it is. And then now it's established this little range. So we could be smart and trade this, not that it's going to go crazy and break out from here to 400, which I think it is, or 500, which I think it will eventually go. But I think we could trade it for income right in here. Now the stock is trading today, it says on the screen 319-ish, 320-ish, right? And so that's where we want to establish our trade. So the first thing we're going to do is instead of going out and having to spend $320,000 on 1,000 shares of Tesla, we're going to go out and we're going to buy a leap. Now, if you've talked, I always talk about leaps, but really they're synthetics. They're deep in the money calls, and these are going to be the 245s. It's $80 in the money, right? And it's trading, the stock is at 320 and we're at 245. So it's in the money by that amount, and it's got an 82 delta. That means it's got an 82% chance at this moment in time, and anything could change, of being in the money at expiration, right? So you got a pretty good chance. That's a probability thing that helps you, right? So you buy that, and now you've got control of 1,000 shares. You buy 10 contracts, and you've got control of 1,000 shares at 245, which are in the money by $80. So you got some cushion there, right? Now, you don't want it to go down too much because that can really hurt you. But let's take a look at it. There's time value there, which means that's the juice. Now, in this case, we're buying juice, right? That's a cost. And if you look, this is about 6 months out. It's 182 days. And so we're talking about, if you divide 6, it's almost $4 a month, okay? Let's see, 22 divided by 6, isn't that like $3.75, something like that? So it's basically $1 a week that you're having to pay for the convenience of having this little bit of leverage. So now, instead of spending $320,000 to buy and control 1,000 shares of Tesla, you're only having to spend $97,450, okay? So let's say you go out that, we're going to write that number down, $97,450 for 10 contracts, okay? or $97.45 for one contract, which is 100 shares. So we're going to do 10 contracts. $97,450 is out of pocket. Now I'll be talking about these numbers in just a second when you get into the math section, but that's how you look at that, okay? All right, the next thing we're going to do is we're going to want to sell a call. Now, for those of you that are new, a call is just an option. Now, when you buy an option, you have the right to do something before a specific date, okay? In this case, you would be buying the stock at a certain price before a specific date. So you want the stock to go up so that it's above that price. That's what's called the strike price, okay? But in this case, we're going to sell the option, okay? So we bought the long option, which is the one we just showed you, the deep in the money call, but now we're going to sell an option, okay? And we're going to make money on it. This is how we're going to get our income, okay? It's really simple at this point. Don't let the math fool you. If you need to kind of take a break, that's okay. Stop it here and you can come back to it. Remember how I said there was a range there? So what I want to do is I want to have a little bit of upside potential because I think the stock is going to go up. And by the way, we're in a green market. So that's number one. I want to give it some room to the upside. And I've kind of drawn that little line that I think it's going to go maybe to 360, something like that. That's going to be the max it goes to, and it may come down to like 310. That's kind of the range that I see building here. Now, if I'm right, great, but I'm not going to try to be all the way right. I'm going to try to be right enough so that I can make some money. So I've highlighted these 340s, okay? Now, the 340s are going to give you this $13.45 of juice, okay? $13.45 of juice plus the upside from where the stock is now at right around 320. The stock could go up another $20 plus $13.45, right? And so now we're looking at the upside potential of $33.55, okay? That gives us a 10% return, and these go out a month, okay? So these are going to go out, these are monthly calls that are going to go out for a month, okay? But that's an annualized return of 136%. If you can get them to go up and be in the money. Now, I'm not saying that's going to happen. So what we can look at is we can say, well, we're going to be getting $13.45, which brings our break even down, right? So it brings our break even cost down from $97,450, to down $13,000 from that. So it's going to bring it down to what, like $84,000. Now we have less money invested, and we have 6 months left to do this. Now we could do this 5 more times in the next 6 months, including this one, right? We could do it every month. So here's how the math breaks down. First of all, it's a couple of steps to do it, and I've got them broken down into sub-steps too. So the first step is you're going to establish your position. You're going to go out and you're going to buy 10 contracts of those leaps that we just talked about, those deep in the money ones, and you're going to be getting 10 of those contracts, $97,450. Then you're going to sell against those contracts immediately. Don't wait. And you're going to be selling those contracts. They're about a month out. You're going to be getting $1,345 per contract. You're going to do 10 of those at $13,450. Okay? But that's income. So that comes off the $97,450 so that we can establish your break-even price, your basis. And that becomes $84,000. So 97 minus 13 is $84,000. That's your number. That's how much you've got invested, $84,000. Okay, next step is we're going to go and figure out the rest of the math. So if the stock stays the same, you have more of a chance of the stock staying the same than going up or going down. So here's how the math works out. If the stock stays the same, you get $13,000 over the amount of money that you've taken out of your wallet, right? That's $84,000. That's a 16% cash-on-cash return. But if the stock goes up like we think it's going to, and we don't know, but if it does, there's a smaller chance of it going up, right? There's about a 33% chance, that's the delta on that, but it could do it, and that's what we're kind of banking on. We get $13,450, the amount of juice that we collected, plus we also get that $20 per contract, or per share, basically, $20,000 total for the 10 contracts is $33,450 when you add those two numbers together, the appreciation plus the juice. That brings you to a $33,450 gain. When you divide that by your amount expended out of your wallet, now you're talking about a 40% cash-on-cash return, okay? Well, where does this stop, Mark? You might say, well, I don't know. I mean, I'm looking at this as something that you could do every single month or every single week, actually, if you want to do it. I have to choose a monthly for you here, but we're talking about making $33,450 in a month, or we're talking about $13,450 in a month on an $84,000 investment. To me, that seems like a pretty good deal. Now, it's Tesla, and Tesla goes crazy up, and it also goes crazy down. So you've got to be ready for those moves. This is not just a set it and forget it, buy and hold, buy a mutual fund and go to the golf course thing. There's a little bit more to it than that. And you have to have a system. You have to know what you're doing. And let's just talk about some of the potential risks, because there are. I don't want to leave you thinking that this is all easy money, although it's the best way to make money, in my opinion, in the stock market that I've ever seen. And I've been doing this for many decades, unfortunately for me. All right. Number one, if a stock goes down, you've got to be ready to adjust your base position, right? Because your delta is going to be decreasing. That means the chances of you having that amount in the money by expiration date are decreasing as well. And after expiration date, if it's below your strike price on those long positions, you've pretty much lost everything. You don't want to do that, right? I know it's 84,000 and we've gotten it down from 97, but what if we got that $13,000 every month and we did it for 5 months? The whole position is paid for, right? But we've got to be able to protect our downside. So don't think this is just set it and forget it. Protect your downside. If the market goes down, it brings stocks down with it. So you've got to be ready to make a trade adjustment. You've got to have a trading plan and trade it. You've got to do it unemotionally. You cannot just wing this because you saw a video on the internet. Make sure you have a trading plan. What happens if the stock goes from 319 to 310? What happens if the stock goes from 319 to 380, 500? What happens? Think about all these things now when you're not emotionally involved. You've got to have a trading plan. Do you got a trading plan yet? If you've been watching my channel, you know that I always talk about that. If the stock goes up, you're going to need working capital to buy over your strike. A lot of people go, well, Mark, you're going to lose money over your strike. You don't lose money because your base position is going up as well. Now, you might have a little delta slippage, but that's beyond the scope of what we're talking about. Your base position is going to go up. Your amount over the strike price is also going to go up. Those two over time kind of offset each other, unless the stock just takes off and goes and goes and goes and goes. But even then, it's still a pretty good deal for you. Okay. The idea is that you've got to manage the position even on the way up. It's not just set it and forget it, like I always say. So you've got to have some working capital to buy above the strike, because over the strike you've got to cough up dollar for dollar in working capital to close out that base position. Okay, and if it gets assigned, which a lot of people ask me, well, what happens, Mark, if you let it expire, your short call expire? Well, what happens is you end up short the position and you have to go back in and buy it back and then go out and sell another call. That's how you normally handle it. You're not going to get your base position taken away from you usually. Okay, it could happen, but I've never seen it happen, but I can't say it never happens. Okay, there's no free lunch in the market, especially with synthetics. So you've got to be careful and you've got to have a plan. That's the bottom line. So let's wrap it up. A 40% return if the stock goes up 20 points, which it was just there a couple of days ago. What did I say? A 16% return if it stays the same. And then if it goes down, you're still going to lower your basis, but now you have to manage your long position. That's part of what we teach at the Cash Flow Machine, is how to deal with the flow of the market. Because the market doesn't just go straight up, and it doesn't just go straight down. It goes up and comes back, and goes up and comes back. And over that time, it might be progressing a little bit further, like I think Tesla's going to be doing. And maybe you do too, because that's why you're watching this video. So I'm going to leave it there. I hope you got some value out of this video. There's a lot of ways to create retirement income using covered calls and strategies like the ones I've shown you. I don't do all the different types of options that are out there. I don't buy options generally, except for these long synthetics positions. I'm not a gambler. I like to make the income, and I like the income from the gambler that's out there, the option buyer, to help me offset my risk and create income in the account. And that's how I create cash flow every single week. Thanks for being here, and I'll see you on the next video. Take care.
Hi, Mark Yagi here, wealth architect and author of this book on my covered call investing system called the Cash Flow Machine. Listen, what you just saw is just one part of creating reliable income of 2 to 4% a month from the stock market. But if it were that easy, then everyone would do it, right? If you want to learn how I create investment income the right way, then you need to learn and have a system with rules and what-if strategies so that you can learn what I do when the market goes against me, what I do when the stock goes against me, how to adjust my trade so that it's always in a winning position, how much to risk, how to build a multi-million-dollar portfolio that creates income of $10,000, $20,000, or $30,000 a month in semi-passive income. And best of all, the whole cash flow machine system takes less than an hour a week to implement. Just go to cashflowmachine.io to learn more, or click this link for more videos, masterclasses, and free resources. See you there.